Okay, and number 4, practice problem 4, we are doing closing entries, which is probably one of the more difficult things in accounting. It's pretty simple, really, if you consider the whole concept behind it. We have some temporary accounts, temporary capital accounts that we add to each month. So at any given time of the month, we can look in the revenue account, we can look in the expenses, we can look in the drawing account and see how we're doing. It's pretty easy to be able to see if the company is doing okay, if we're taking out too much for personal use, if we need to advertise because our revenue is down, or if we're spending way too much for expenses. And sometimes this can help a company avoid a calamity by overspending or by not advertising enough. So this is kind of an important thing for them to do. So, but at the end of the month, it's kind of like a odometer on your car. At the end of the month, you want to change it back to 0. So you close those into the capital account and show the effects of those on the capital account in that one account. Also, we have one temporary account that we only use for closing entries, and that's income summary. And that's so that there's an account where we can actually see our revenue and expenses in one place. Okay, so to do this, we start with looking at the accounts. We don't close cash ever. We hope to always have a debit balance in cash, accounts receivable, wages payable, that's our liability, and our capital. So we start with, and we're going to close our drawing, but we won't do that first. Let's start with closing our revenue account. So our revenue account is tennis instruction fees, and it has a balance of $4,000. So what we want to do is go down here, and if it has a credit balance, then we need to do the opposite to close it. So we debit for the first time and the only time tennis instruction fees, unless we have something weird happen. So we debit $4,000, and we're going to credit that temporary income summary account so we can see what effect it has on capital. And it's a credit because it increases capital. It's a debit to close it into that account. And I put post reference, I put that in the wrong place. So this should be 4,000, and this should be 4,000. We don't need to enter the post reference right now. Okay, so then we go to our next one, and we're going to close each of our expense accounts. So we will start with advertising expense of 200, and so we're going to credit each of the expenses. So we will debit income summary, and then we'll credit each of the expenses, starting with advertising expense. Maybe advertising isn't the first one. You're right, it's wages. No wonder I'm not seeing it. So it's wages expense, then advertising expense. I need to get the amounts too. So wages is 730 and advertising is 200. So 730 and then 200. Notice these are credits. We have to do the opposite to close them, just like you close a door by doing the opposite that you did to open it. Travel expense is 600, and it's a 600 debit, so we're crediting it to close it. The next one is supplies expense 500, and again a credit. The next expense is insurance expense for 100. The next one is postage expense for 50. Gas and oil for 150. And miscellaneous for 80. Okay, and once I've done that, I need to now total all those to get my debit amount that I'm going to put here. So I'm going to clear my spreadsheet from my last problem, and I want to add all of those. So I'm going to put 730, 200, 600, 500, 150, 150, and 80, and sum those for 2410. I just real quickly want to check and make sure that I didn't input a number wrong. Easier to find the arrows as you go than at the end. And so the debit amount for that would be 2410. And that's called a combined entry, where you have one debit and a number of credits, or even just two credits, but in this case a number of credits. Okay, so the next thing we need to do is close income summary. If you look at income summary right now, you have in that account, you have 4,000 credit and a debit of 2410, just those two entries. It's where we're showing in one account the matching of your debit, the matching of your income and expenses. So 4,000 and 2410, I need to subtract those two, and it is a credit balance because it is a net income, because the income side is larger. So it's a 1590 credit balance. So to close it, I need to debit that account. So I go to income summary, and I would debit that account for, get back to my spreadsheet, 1590, and credit capital to add it to my capital. This is where we've journalized what happens to capital, or we've done it on our statements, financial statements, but we have not actually shown it in the account until right here. So again, if income summary is a net income, you're going to debit it to close it, because it would be a credit balance if it's a net income, and you would credit capital. If you wound up with a net loss, which we haven't seen one of those yet, but if you did, then it would have to be a credit and a debit to capital to subtract from capital. And then the last closing entry is drawing. And drawing is a debit balance, so you would close it with a credit, and you would debit your capital, which subtracts from your capital. So you would debit capital and credit drawing to close it. And the amount of drawing for this month was $1,000. So we go up there and then we put that in there, 1,000 and 1,000 here. So 4 closing entries. First, close your, however you make your money, whatever your revenue happens to be, which is going to be a debit and a credit to income summary, debit to fees to close it, and a credit to income summary. And then you do a combined entry to debit income summary, because it subtracts from capital, and all your expenses listed, and that total goes into the debit side. You're crediting your expenses to close them, opposite of what you do to open them. And then you close your income summary account to actually show the effects of revenue on capital. So income summary is 1590 because it is a credit balance, since you have a net income, and credit capital to add to it. And then close your drawing which is a debit to capital to decrease from capital the amount of your personal use, and credit drawing to close it for the month. And then next month you'll fill it back up again and then close it again at the end. Now they want us to post the closing entries to the T accounts following the top journal entry order. If there's more than one closing entry, enter in the order given in the journal above, then complete the posting for part 1. Okay, so what we're going to do, and they've given us squares here to do it, we'll start with line 1, which is tennis instruction fees, a debit of $4,000. So I go to tennis instruction fees and I debit it $4,000, and now you can really see what happens there. That $4,000 credit balance minus the $4,000 debit balance closes it. So that one is done. And we need to put the document number in there, which was 401, or the post reference. Okay, then income summary, we credit it for $4,000, so we go to our income summary, 4,000 credit, which gives it a 4,000 credit balance, and that's account 313. Okay, then we go to the next one. Income summary is a debit of 2410, so we go to income summary, and it's a debit of 2410, and that's account 313. By putting in the post reference, it tells you that you have completed that one. So don't put it in there until you have actually completed it. So the next one is wages expense. And to close it, we credit it for $730. And it's account 511. And I'm going to go ahead so we don't scroll so much and close each of those. Okay, and so then we just need to go up and put our account numbers. So the first account number was 511, 512, and then 515. Excuse me. 511, 512, and then 515, and then supplies expense was 524, 535, and 536. And then the next one, 538 and 549. Okay, and then we need to close income summary. So we debit income summary for $1,590. So we go down here to our income summary and debit it for $1,590, which will close it, and that's account 313. Then we go to our capital and credit it for $1,590 to show the addition of income to that, and we're going to balance that. So $9,000 to begin with, plus the $1,590 equals $10,590, and that's account 311. And then we go down to capital to debit capital to decrease it for the amount of the drawing, $1,000, and that's account 311. And finally, we close drawing of $1,000. and that was account 311 or 312 probably. Yes, 312. Okay, and then check your work. Okay, and I have one error here, so I need to look and see why I have that error. I had 9,000 plus 1,590 is 10,590. So 9,000 balance. My closing, let me see if I wrote that down right. I did. $10,590. Oh, it wanted me to do that after I should have subtracted over here. So that's my final balance. So I add those two and then subtract 1,000. So it would be 10,000 or 10,590 minus the 1,000, which is 9,590. Okay, and then check your work again. And that corrected the problem. End of this video.